Hi everyone. So today is going to be our sixth session for investment analysis. And as you can see in the slide, today we'll be covering sections such as regulatory environment and risk mitigation methods. And before starting on, let me increase the slide size. Okay, I just hope now it's all clear. Hold on. Yeah. So as I was telling you, I even though there are learning outcomes, I had kind of prepared specific lessons, which included all that is necessary in the learning outcome according to a specific method. So this particular lesson, which is about regulatory environment and risk mitigation methods, will basically talk about regulation. So especially the regulation which will govern the financial industry for in order to make sure there is fair presentation and there's proper performance. And one of the entities that we will be talking about will be the IASB, or which is also known as the International Accounting Standards Board, and also the International Organization of Security Commission, which is known as IOSCO. And we need to understand these two entities are the ones which are mainly responsible in order to set up and regulate the whole industry, providing frameworks to the accounting profession. Especially when we look at the IASB, we know that it basically issues the IAS and kind of follow the strict procedures in order to ensure that they can be integrated into any type of local regulatory requirement. So basically, IASs will have like and kind of like regulation for any type of company to follow, which would also be in line with the local regulatory system, where the annual audit of a company can use one of the methods through which the financial reporting is monitored. Now, why do we need these regulations or framework? That you would just wonder why. This is because when there are many companies and there are certain activities, transactions that are happening, there should be a specific way that the companies are audited. So in order to audit it, there should be specific frameworks that the companies follow, and those frameworks will basically be set up or regulated using these IASBs mainly, in order to ensure that when you so this would basically, one of the advantages of having something like this would be that when it comes to, like, let's say you have two different companies in the same industry. So if all the companies follow specific regulation, that means the whatever the outcome that comes out of it could be compared. So by using regulatory frameworks, what happens is any manager or like any person, any stakeholder is able to even compare and contrast the results of a similar company. So because obviously all the companies and the managers know that a specific framework is being followed. That means obviously most of the companies do follow a certain level of similar methods when it comes to regulating certain sections. So when it comes to the annual audit, or when it comes to the results of the like the annual income statements, it would be kind of similar. Most of the require, like most of the whatever amount that coming out of it would be similar and could be compared with another company. So now we also need to understand. So as you can see, we'll be talking about these bodies and the regulation. Thereafter, we will also be talking about financial risk. So what is financial risk? This is mainly risk that which various type of risk which will come due to various business operations which would affect the company's cash flow. So, like basically, an organization is required to kind of manage these risks in order to minimize the volatility of the cash flows. Also, it is important to kind of understand that specific type of risk related to finance, the means of manage need to be managed in order to ensure that the risks are kind of managed in the company. So there are different types of risks related to any operation. So one of the things is that, so one of the financial risk would basically depend upon the cash flows, because an organization obviously needs cash flows to operate, right? So this would be one of the main sections related to the risk, financial risk. So basically in this lesson, we will deliver things like regulatory audit process, and we will be talking about interest rate risk and hedging techniques and how the tax is avoided or evasion. Those will be kind of covered here. So basically, initially, I will probably talk about interest rate, the regulatory audit process, maybe the interest rates and hedging technique. About tax avoidance and evasion, I think I might have to kind of talk to you after talking about taxation. We'll be having a main important section where I will be talking about different types of taxation, which is according to the learning outcome. So now moving on with the topics under this lesson, we will be talking about regulatory and audit process. Then thereafter, we'll be talking about interest rate risk and hedging techniques. So basically now some of the hedging techniques were under, maybe learning outcome 1 and 2. However, because we are talking about the interest rate and all that, we'll be continuing to include the hedging techniques here. Tax avoidance and tax evasion, maybe we will continue in the next week, or we will be continuing this after completing the main taxation as well. So moving on, now the first thing is regulatory and audit process. Now let's see what, now I said about IASC. So IASC and the standard setting process. Now in order for the users of financial statement to interpret or understand financial statements, there should be kind of a standard method of reporting. So as I explained to you, there will be what IASB does is, or the IASC will be doing would be to have like a standard that is set regarding to all the financial statement transactions that generally happen into different sections. So basically it will help a user to kind of interpret the financial statement. Also, as I told you, will also help the user to kind of compare and contrast between the financial statements. So that's why a standard setting process is very important. And so we need to understand why there is a regulatory audit process and why there are standards. And this is the reason. So now when it comes to the accounting laws, this could vary country to country. We need to understand because each country doesn't follow the same accounting laws. It does have their own country laws. However, the principle remains broadly the same. So one thing that we need to understand is mostly when it comes to a country accounting law, what they also do is they will be looking into one of the main accounting bodies and the standards and try and incorporate most of the laws related to it to their country accounting law, because basically when it comes to the IASB, they are the main standard setting organizations in the world. Therefore, the benchmark to any country would be them and their rules and regulations. So basically, when it comes to IASB, we need to understand that they will be issuing the IASs, and basically they will be integrated to the local corporate environment, taking into consideration of their own economic and social factors. So basically what happens is a country actually would have their own taxation and accounting laws, but basically the governing body of the world and their standards will obviously be considered, because of this is a globalized world. There are companies which do international transactions, and also companies who go and set up their own maybe companies in different parts of the world. So when that happens, there should be some kind of similarity when it comes to even preparing the financial statements, and so that the interpretation will work well in this globalized business environment. So however, when it comes to the local corporate environment, what a company does is they will look into all the accounting laws, and they will also take into consideration things such as their own economic or social factors, and do maybe a little bit of changes. That's all basically what happens, is because mostly it will be the same. So when it comes to regulators such as IASC and IOSCO, they have different business structures and the objectives which should be understood. So now let's see. Now, what is the need for regulation and its variation from country to country? So now, because I just said, okay, right, there is a main body and they will be having a standard that is set. Why doesn't all the companies on earth follow the same rules? I mean, that's easy, right? Then obviously interpretation will be easy. It'll be way easy, and also when it comes to comparison, it'll be easy, and even work-wise, it'll be obviously easy. That because when I'm talking about this, you would wonder why is there is a slight variation from country to country. We need to understand that. So what we need to understand is there are many social, economical, political factors which will generally influence into the accounting laws and practices in a country. And these varying factors will have caused many countries to use their accounting method. Such as even when it comes to taxation, there'll be different kind of taxation that will be introduced in certain countries. There'll be certain taxation that is not used based on the political factors, and these laws and practices will vary because of different economic, social, and political factors. So accordingly, a slight change would obviously be there when it comes to countries and their accounting method. Now let's look at the ISC and standard setting process, and we will look at the steps that they follow. First, there is a need for regulation, right? So basically, regulations are kind of required to provide a guidance and to ensure that the financial statements are interpreted in the same way, and especially when it comes to calculating taxable profits, the adjustment made to accounting profit will vary from country to country, and different jurisdictions have different laws. Part of this variation is due to the difference in tax regulations and the different approaches used to compute the accounting profit. So there should be kind of like a regulation. However, when it comes to taxation, obviously the tax regulations are obviously kind of politically motivated. I should say affected by political factors where the tax regulations differ according to the country situation and the policies of the country actually. So therefore, the taxable profit and the adjustment and the computation of accounting profit would differ from country to country. Therefore, there should be some kind of regulation which says, no, you can't change this so much. I mean, the differences can only be due to these things. There should be some kind of regulation in order to have a standard setting process. Okay. So then the other reason is the variation from country to country. So in addition to legal system and tax legislation difference, there are other factors which will kind of contribute to variation between the jurisdictions, such as the sources of finance and the capital markets, where like a large portion of the capital is basically raised through like capital market, or whether there is a demand for financial information, as many shareholders will rely on public information. So sources of finance of the capital market will also affect the tax regulations and the legislation, because and also the political system, as I explained to you, where the nature of regulation and control on accounting will kind of reflect the political philosophy and objective of the ruling party. Like example, there could be a tax on dividend, there could be like maybe a tax in one country, there could be a tax on dividend, in one country it might not be there. There could be a VAT, value added tax in one country, while another would not have it. So income statement, I mean income tax could differ in each country according to the policy they have. So another way is the entity ownership. So if there's a large number of shareholders, the need for public accountability is greater. So there should be a certain standard setting process. And also when it comes to cultural differences, the culture in the country would probably influence the societal national values, and which can influence the accounting regulation. Sorry, like example, if you kind of take the environmental law accounting, because there could be countries which have more environmental law because of, large natural resources, also could be because of the people and how they think about the environment. When there are more environmental law, then those will be included in accounting as well. Okay, now as you can see, we will be talking about harmonization and standardization. When we're talking about regulatory and audit process, there are two things that we will be talking about. One word that will be used is harmonization. What is harmonization? This is basically like the process which is used to increase like the compatibility of the accounting process by setting bounds to the degree of variation. And so also it is more like a concept which is followed as an agreement of the common conceptual framework of accounting, which basically may enable a close harmonization of accounting practices. So basically, this is increasing the process which is used to increase the compatibility of accounting practices by setting kind of like bounds or like degrees that there could be variation. And so basically the main concept is followed, but there will be certain variation. And there is a common conceptual framework which is used by the accounting body when it comes to harmonization. Now, what is standardization? Now, how does it differ? We need to understand, right? So standardization tends to kind of imply the imposition of a rigid, narrow set of rules. So it also implies that one technically correct method can be identified for every aspect of accounting and can be imposed on all preparers of accounting due to the variation between jurisdictions. A complete standardization of accounting practices is unlikely. So basically what happens is harmonization, because standardization basically says that everyone needs to follow rigid, narrow set of rules, which obviously cannot happen because of some of the like the factors that I explained to you, because the countries are different, taxation laws will differ as well, and the framework that they will be following will differ. So basically, between jurisdiction, a complete standardization will generally not happen. So it is mostly unlikely. We need to understand that. Now we are moving on towards generally accepted accounting practices or policies, also known as GAAP. We would generally call it the GAAP. Okay, generally accepted accounting policies are we generally call it the GAAP for easy use, and the International Accounting Standards Committee Foundation, IASCF, right? IASC. So basically, you will need to understand generally in accounting, we'll be using GAAP, the short-term GAAP, and we will be using IASC, which means International Accounting Standards Committee Foundation. And we will also use IASB, which I said the International Accounting Standards Board. We won't be using the whole phrase. We will be using the shortened form. So GAAP is kind of like a set of conventions and processes used as a guideline in order to prepare the financial statements. Now, when it comes to GAAP, next to IFRS, this is one of the mostly used kind of accounting policies. So IASC is like a non-profit organization which is the parent of IASB. So IASB is the parent. Sorry, IASB would be like a non-profit subsidiary of the IASC, and they so they are the ones who generally use these regulatory frameworks. So now talking about the areas, so there are areas which are included in GAAP that can be listed down. So basically, let's see what are the areas which are generally followed. What are the accounting policies which are generally followed? So as you can see, like the conventions and the rules and procedures necessary to define acceptable accounting practices at a particular time. It is basically kind of included in GAAP. So also it includes broad guidelines as well as detailed practices and procedures. And also it includes the local legislation requirements as well. And now looking at the local accounting standards as well as other locally acceptable regulations, we need to understand all these will be listed upon GAAP. Moving, hold on. Right. So now when we look at GAAP, it could basically be based on legislation and accounting standards that are Either you can call it prescriptive in nature, setting out like details on every possible permutation that an account may come across, or could be like a principle-based accounting standard, which basically has, which will set out the principles and not specific and does not include many detailed requirements for the application. So now I do understand this particular lesson is kind of boring because we're talking a lot about like theory things, which needs to be covered actually in your, it is included in your learning outcome. Therefore, you need to really understand a little bit. And I do understand that this particular area is very, it's very not something that is very interesting to study about, because we are just basically talking about the rules and regulations. Obviously, people don't talk to, I mean, like to do that. So take a short break and see what we can do about it. Now, we will be trying to see what are the advantages of GAAP is. Okay, looking at the prescriptive standards. So basically, when it comes to GAAP, it is basically precise. And generally, the requirement is kind of clear and also well understood. And there is one correct way of dealing with like every item, and it is more obvious than an entity does not follow GAAP. So basically, the GAAP is basically precise and clear and well understood. Therefore, it's an advantage. I mean, there is when there's precision, obviously it's easy for accountants to understand, or anyone to understand. So there is always a correct way, which is very important. I mean, there is no situation where people wonder, okay, right, is it correct? Do we need to follow a different approach here? So when there is a rule, it's kind of easy. And one thing that we need to understand is it will be more obvious when someone doesn't follow US GAAP, because you see the differences, and it could generally be taught or learned quite easily. And it ensures that similar items are treated the same way. One of the main thing is that when it comes to similar items in GAAP, it will be treated the same way. So it will be very easy to kind of remember and to be learned as well. Moving on, now advantage of GAAP based on principle. So when there is kind of like an individual standard in place, it will be basically hard to construct ways to kind of avoid them. The principle would basically apply no matter what value it is putting into. So basically, when it comes to prescriptive standard, this would basically be out of a definition or like a specify a value that should be used when applying the specific standard. So when these individual standards are in place, it will be hard to avoid them, as the principles will kind of apply. Now, when it comes to certain situation, there will be like a requirement to kind of use like the professional judgment and to ensure correct application. So when it comes to a prescriptive standard, there is like a certain treatment to be used regardless of the situation. So it is very important, and the GAAP based on principle will ensure that the spirit of regulation is adhered to, and whereas the prescriptive system would lead to the letter of the law being followed. So those are another a few more advantages based on principle of US GAAP. Now, International Accounting Standard Committee, or the IASC Foundation. Now, again, we are going to talk about the foundation. Now, I do understand it is not, hold on, this is not something that we is something that we are really, I mean, doesn't add too much of value to what we are learning. However, it is also important just, merely understand who is setting out these standards, where do they come from, and what are these, I mean, what is this foundations, and what are these committees, and why are we, why do we have to follow these committee, standard committee, whatever, whatever rules that are set by them, why should we follow them, right? For us to understand why it is followed throughout the global, I mean, the world, we need to kind of understand what it is exactly, right? So when it comes to the IASC Foundation, this was actually incorporated as a not-for-profit organization in March 2001, which is obviously around 20 years ago, as you can see. And the parent entity of the IASB is the IASC, as I told you before as well. Now, now there is something called recommendations on shaping IASC for future. So this basically includes the recommendations of restructuring the IASC, and basically this revised format will basically bring a new committee structure, and there'll be some changes to the standard setting process, but basically retain the overall objectives and principles with the original setup. And when it comes to the IASC, this is basically an independent organization with two main bodies, the trustees and the IASB. So I told you that this is all part of IASB. I mean, that IASB is, kind of like a subsidiary or something of IASC. So obviously there are two main bodies under IASC, which is the trustees as well as the IASB. So when it comes to the Standard Advisory Council and the International Financial Reporting Interpretation, committees are generally included in the structure of IASC. And when it comes to the trustees, they are the ones who are responsible for the governance and the fundraising, and also into like publishing annual reports on the IASC's activities, including things like audited financial statements and priorities for the coming year. So now from this, one thing that you need to understand is now IASC is a not-for-profit organization. If it's a not-for-profit organization, they also need to publish annual report with the IASC activities, and also have audited financial statements, because it is an organization. So they also do have to come up with audited financial statement yearly, and the trustees are the ones who are responsible for the fundraising, the governance, and even the publishing the annual report, including all these IASC activities and the audited financial statements, in order to make sure that this governing body also follows the rules and regulations. So one thing that we need to understand, this regulatory body does not just, put rules for everyone else and just sit and wait. They also need to follow rules and regulations that they set up, and they try to show that they are also following these rules and regulations, so that all the other stakeholders will take this, take this well, and then they will also follow the rules that is set up by the IASC. Now, also talking about the IASC, they basically review kind of like the effectiveness of the IASC strategy annually, and approve the annual budget and determine the basis of funding. So now this is a not-for-profit. Now, as you can see, this is basically a not-for-profit organization, which That means that this would be based on funding. So even to base, when they are determining the basis of funding, they also need to determine like what are the strategies that what are the activities that are followed by the IASC annually, and also need to approve the annual budget in order to ensure that this particular foundation also runs in according to the rules and regulation that is set up for a not for profit organization. So when it comes to the trustees, they appoint the members of the IASB and the Standards Advisory Council and also the International Financial Reporting Interpretation Committee. So the trustees are very important people who are the ones who appoint the members for the IASB, the Standards Advisory Council, as well as the International Financial Reporting Interpretations Committee. So so you need to understand that the trustees are like a very important part of IASC. Now, talking about trustees, they basically decide the operating procedures of the committees in IASC, and also excludes from the involvement in technical matters as well. Now, when it comes to the trustees, they would normally serve for a 3-year term, which would be renewable once the term is over. Now, who can become a trustee? You would wonder, okay, these trustees do a lot of things, and who can become a trustee? You would wonder. So trustees basically should have sufficient knowledge and experience to kind of allow them to fully appreciate the issues relevant to IASC and the ability to meet the committee's time and commitment as well. So they have to have sufficient knowledge and experience related to these. Not anyone can just become a trustee of a board such as IASC. That you need to understand. So mix of trustees must represent the world's capital markets, therefore appoint from North America, Europe, Asia, and other areas. So now when it comes to these trustees, now we told that IASC is a board which includes IASB, and they will be having the main standards related to the financial statements and financial activities. So in order to do that, they will always have a mix of trustees coming from different parts of the earth, where especially coming from different continents. So basically the trustee would come from North America, the Europe, Asia, so all sorts of areas in the world. So basically when it comes to trustees, they just don't come in from like the first world countries. It would be kind of be a mix of coming from different continents and areas, so that the like cultural differences and differences in social backgrounds will be incorporated in whatever rules that they will the committee would come up with. So when it comes to IASC, this will also define the experience required by the trustees, and 2 of them will usually be senior partners of the prominent international accounting firm. So now when we look at the trustees, I said it would be a mix of trustees coming from different parts of the continents to ensure that there is, how do you call it, that there will be probably harmonization, or there would be like a mix of different races as well as different social backgrounds here. However, there will also be two trustees who will be senior partners from prominent international accounting firms. This is why do we include two senior partners from prominent accounting firms. It is to ensure that whatever rules and regulations that are passed and that are followed and that are set upon the whole earth, we should say, would be according to proper accounting methods, and so therefore, like, senior partners from prominent international accounting firms will also be part of these trustees. So when we so as you can see, IASC would, I mean, it's not something that just is built upon based on some country or anything of that sort. Here, what they try to do is they try to incorporate the experiences and also like different perspective coming from different parts of the earth in order to ensure that the rules and regulations and the framework that are set at the IASC could be followed by everyone from different parts of the earth. Now, we will be talking about the IASB. So what is IASB? I know we are just talking a lot about lot of theory, which is kind of boring. So I talked about IASC, and what is IASB? So IASB is basically a part from IASC, or I've just kind of explained to you before how this is mainly like two arms. Trustees and the IASB are like the two main bodies of IASC. Hold on, let me move on to the correct. So as you can see, now IASB will have basically 14 members, and out of that, 2 of them will be like the full-time employees. So the appointments basically are based on technical expertise, and basically it would ensure that the IASB has the experience to tackle relevant businesses and economic issues, and also the appointment for a term of 5 years and can be renewed once. Now, I told the trustees in IASC will be renewed within a term of 3 years, and that they are renewable. Now, when it comes to IASB, the term would be 5 years, and thereupon renewed or changed. So moving on, sorry, I'm just trying to see what is included here. So moving on, we need to understand that out of the 14 members, 12 are full-time employees, obviously, because they have a term of 5 years, so they have to be full-time employees who are in line with working towards the rules and regulations. And so basically, when it comes to the appointment, the trustees generally appoint one of the full-time members as a chairman, who is also the chief executive of IASC. So trustees will obviously be appointing one full-time member who is considered as the chairman, and also he will be the chief executive of IASC. The 7 of the full-time members are responsible to communicate with international standard setters to promote accounting standards, and the IASB has responsibilities of technical matters, preparation and publication of international financial reporting and standards, which are like IFRS and exposure draft. the withdrawal of IFRS, and final approval of interpretation by the International Financial Reporting Interpretation Committee. So, as you can see, so one person will be the chairman, who will be the chief executive of the IASC, as you can see, and out of the 12 full-time, one would be the chairman, and then there will be 7 more full-time members who will be responsible to communicate with the international standard setters, like to promote the accounting standard. Now, it's like this. No, now just because they follow, I mean, they make up rules, does that mean that everyone on earth will kind of follow it? You think that will happen? Generally, is it something that will anyway happen? I mean, someone sets some rules and say, okay, this is the rules you have to follow. But will everyone just follow because someone just comes and says? I mean, will you follow? If someone just out of the blue comes and says, okay, right, we have a set of rules, you need to follow it from tomorrow or next year. You follow it? No. So these full-time members will be responsible to kind of communicate with they will basically be communicating with the international standard setters in order to ensure that they promote the accounting standards. Also, when it comes to the IASB, they are kind of responsible for technical matters. And like they will be talking preparation of publication of financial reporting standards. Like basically, now IASB, one of the main things that they do it, they set out the IFRS. Before it was mainly the IASs. Now there are many IFRSs that were introduced. Drafts were kind of introduced in saying that the IFRSs try to incorporate more things than the IASs, and there is like different IFRSs where 2 or 3 IASs are kind of combined together, and similar type of similar type of work or transactions are being included in the IFRSs, and the final approval of these particular interpretations are generally done by this IASB, and these will be approved by the International Financial Reporting Interpretation Committee, IFRIA. So, moving on. Now we have to see what now I told. IFRIC is the ones who approve the financial the interpretations that are kind of drafts or whatever that is prepared by the IASB. And now let's see what is IFRIC. I'm very sorry that today is like a very kind of like I should say an area which is not exactly interesting to present because it has a lot of facts basically, and it I know it's kind of monotonous when I explain all this. I mean, we are talking about committees and what they do and all that. Obviously not exactly kind of something that is very interesting to look into. So, but one thing I want you to kind of remember, the basic thing I want you to remember is there is IASC, right? And it has 2 sections. Okay, one is the trustee and one is IASB. So basically, trustees are the ones who are responsible for the governance, publishing annual returns, whatever it is related to IASC. And IASB is the part which kind of talks about the regulation, and they are the ones who will be kind of involved in setting up new regulations, accounting regulations, saying, okay, this is what we need to do, this is what we should not do, and all that, right? And now there is another section or another type of committee which comes in, the International Financial Reporting and Interpretation Committee, which is needed in order to, whatever is done by IASB need to be kind of approved by the IFRIC. So now let's see what is this IFRIC. So this IFRIC was established in March 2002, which is 10 years ago, obviously 1 year after setting IASC, with the replacement of the previous interpretation committee, the Standard Interpretations Committee, SIC. So IFRIC was established in 2002 as a replacement for SIC. So what does this committee do? So this committee basically assists the IASB in order to establish and improve their standards of financial accounting and reporting for the benefit of the users, preparers, auditors of the financial statement. So they kind of assist IASB with preparing all the standards and things of that sort. And IFRIC provides a timely guidance when it comes to application and the interpretation of IFRS. So they kind of deal with the complex accounting issues that could produce wide-ranging or unacceptable accounting treatments in the absence of guidance. So they will generally provide timely guidance related to things which has absence of guidance. And the IFRIC produces basically draft interpretation, which are open to public comment. And if no more than 3 out of 12 of its voting members have voted against an interpretation, the IFRIC will ask the IASB to approve the final interpretations for issue. So you need to understand when it comes to draft interpretation, it is not basically easy for IASB to come up with the standards. I mean, they can come up with the standards, but the approval process is a little rigid where so if more than 3 voting members have voted against a certain interpretation, then what happens is it is not approved. The IASB needs to kind of do the changes according to approve according to a final interpretation for the issue. So you need to understand these IASBs, IFRIC, they are like standard boards, and it is not easy to kind of come up with the standards because there are so many governing bodies which look into it. So it's not like a standard kind of thing, governing body, which just moves in with some kind of rule, but there are so many bodies which will look into all the decisions made by like committees such as IASB. So compliance with the IFRS requires compliance with the relevant IFRIC interpretation. So in order to have a compliance with the IFRS, there should be relevant IFRIC interpretations, which is complied into. So this is IFRIC. Now you can see that IFRIC is kind of needed. They are the main body which will check on the compliance and approve whatever is prepared by IASB. Moving on, we are going to talk about the objective of the IASC Foundation. Now, moving back to IASC Foundation, now what are the objectives? Why are they just even having something called IASC? We need to try and understand that, right? So basically, these are prepared in order to develop in the public interest, a single set of high quality, understandable, and enforceable global accounting standards that will basically require high quality, transparent, and comparable information in the financial statement, other financial reporting to develop participants in the world capital markets and other users of making accounting decisions. And when it comes to promote the use of rigorous application of the standards, taking account of the needs of small and medium-sized entities will be looked into as well. So another objective is to bring about convergence of national accounting standards and the international accounting standards to make sure that there is high quality solutions where there is a convergence between all these accounting standards. So that is one of the other objectives of the IASC Foundation. So what they try and do is they are obviously going to incompatibility when it comes to standards, because whatever you say, the countries will be following their own standards. However, the IASC is attempting, the objective is to basically try and see that they will converge all these accounting standards in order to ensure that whatever to ensure that there is a global accounting standard that can be followed by everyone, and mostly the changes are little, and all the data or the information that we gain from the financial statement is of high quality and transparent, also that it is comparable information, so that any person who wants to look into the companies can compare companies within two countries in the same industry, in different industry. I mean, this ensures that the stakeholders have more information about the country and the company as well. So that is one of the main information about by IASC Foundation. So now we've actually been talking a lot about these different types of financial reporting kind of standard companies or like non-profit organizations. I don't want to move forward, move more towards all these theoretical aspects, because I feel like today we had a lot of theory involved. And so therefore, I think that it's better if we kind of stop here and kind of see what we can study next week as well, because too much of theory is very difficult to kind of feel by any person. So basically, I want you to just remember a few things. There is IASC there. So okay, let me do the recap of today's session. Oops, hold on. Oops, okay. So regulatory and audit process, we were talking about standard setting process and why is it needed. And then we talked about US GAAP and what are the advantages. Then we talk about IASC Foundation. We said it was a non-profit that was kind of set up in 2001. And then we spoke about what are the two main bodies, the trustees and IASB. Trustees are the ones who will be like, kind of appointing the members of IASBs and checking on the related activities and publishing annual reports and all that of IASC. IASB, on the other hand, will basically be kind of handling all the accounting standards, and they will be developing the accounting standards and trying to communicate it with the international standard setters. And when it comes to IFRIC, we also mentioned that even though IASB is something that would kind of follow, have their own standards, that approval for the interpretations developed by IASB needs to be done by IFRIC. So IFRIC need to approve in order to say that the IFRIC needs to say that it is it complies to whatever is there in IFRS. So yes, moving on, we'll be talking, and we also spoke about IASC and what the objectives are, and we'll be talking basically about CAC and different things related to IFRS and all that in our next class. Hopefully a lot of theory, yes, but hopefully we will be able to just cover all these theory areas and move on to hedging section, so that we'll be able to talk more about something related to calculations and mathematical sections as well. Okay, thank you everyone for listening to me. I know it had not been an easy task to listen to all these theory aspects. I do hope you understood what I explained to you, and I hope you have a good day. Thank you, everyone. See you next week.